Hi everybody, welcome to Chapter 4 from Money in Schools. We're going to be looking at school funds, accountability, and professionalism. We give you the key objectives for the chapter as normal. I'll read through them briefly so you can think about them. What is fiscal accountability? What are the fiduciary responsibilities of districts and administrators? How does the accounting process help establish accountability? What are the purposes of accounting? How are educational budgets allocated? How does school money get tracked? How do revenue and expenditure structures assist in tracking money? How do audits improve districts' abilities to track money? And what ethical standards should guide school leaders' professionalism in handling school money? So, as you can see, this really is a chapter that stands on its own and it looks at kind of this individual accountability system. This is really school reform related to finance, which I think is important in Florida more than any other context. You have a countywide system, so you're looking at revenues and expenditures much differently than you would in a district-wide system because it can impact multiple levels, multiple high schools, multiple buildings, and that's a problem. So one of the things that we need to think about really is, what does the context of the county system do and how does that impact this? So fiscal accountability. This is basically saying that money should be handled appropriately. The decisions made financially should affect and impact schools, and the use of resources should be done in an appropriate manner. One of the things that I stress, and you see this in Florida quite frequently, is that public citizens care more in education than they ever have been before, regardless as to whether or not they have children in school. Because they're paying taxes, and I'm a taxpayer. I need to make these decisions as a taxpayer. So this is giving us a much different perspective on schools, and it's making us look at fiscal accountability much differently. So what are your fiduciary responsibilities? This is the notion, really, that playing the beneficiary interests above the interests of the organizations. So what that means is every decision you make in budgeting, you need to somehow say this is in the best interest for students. Because the public is there, you have to make these decisions more and frame them in the best interest of students. I have to cut 50 teachers from my building and I have to cut the art program, but I'm doing it because it's in the best interest of students. We need to specialize our focus. We need to redistrict, and we need to build another elementary school because the population is overflowing, and I'm sorry, your child's not going to go to school with their friends anymore, and we're redistricting, but that's okay because it's in the best interest of students so they can have smaller class sizes. We're building a new football stadium next year. We're doing this and we're spending $15 million on it, and we're getting a bond and we're taxing you more, but it's in the best interest of students. It's going to impact the marching band, it's going to impact the football team, and it's going to be wonderful. Get used to talking like that, because if you're doing something and you have to justify to a school board or justify to a community organization why you need money, frame everything in best interest of students. That's the big idea. So what about colleges? All that I want to tell you is public school, there's much more accountability than higher education. Really, in all honesty, the accountability is starting at the undergraduate level. It's increasing where we're worried about people finishing it at undergrad. But I really don't feel as though there's much accountability at all at the graduate level. Think back to your master's programs. Maybe you had a different experience than I did. If I didn't show up for a master's class, nobody cared. If I failed it, nobody cared. I wasn't getting a call from an admissions counselor saying, do you need help, do you need support? Nobody really cared about my performance in graduate school. I had to take that on myself. I think this environment is different because you all are in a cohort, meaning that you each hold each other accountable, which creates a different piece involved in this as well. So, education programming in the United States, you'll find that credentialing programs have much more higher accountability than non-credentialing programs. My prior job, I was a program director for early childhood education. So I taught in it, but I also was the program coordinator between the branch campus and between the main campus. Everything that I did, and I also taught graduate classes too, everything that I did in my undergraduate classes, I had certification requirements, required assignments we have to do. A, B, and C, and we have to meet this objective for NCATE. But in the graduate classes, I had free and I could do what I wanted. And that was nice, but I think there was an accountability piece that was built into this. So think about that when you're thinking about that responsibility. In theory, college should be for you, for your personal interest and advancements. But public school, it's really everybody else who's involved in it. And I think that's a big idea as well. So I believe accountability is going to increase in the United States in higher education. I think the more programs offer, the more programs are held accountable. This program, you guys have to graduate. I'm sure there's statistics on graduation rates that are going to come from it. When you have a college-high school partnership, something we're going to be talking about in this class, increased accountability. The one that I am seeing right now in my organization is the comprehensive doctorate. This is, you get a doctorate in administration that gives you principal certification and superintendent certification in one. That's very increased accountability because you have to have two different sets of standards and two different certification requirements. And for the people that go through our program that are doing this comprehensive doctorate, it can be a challenge. And I'm seeing that at my organization and in ways that we can work with those students. Most of them have to take, instead of doing 6 or 9 credits a term, some are doing 12 or 15 so that they meet all the requirements and meet the accountability provisions. So what are the duties? What do you have to do? Well, these should all be easy and make sense to you. You have to plan. You have to look into the future, identify resources and needs, and have a master plan. Strategic planning, strategic planning, strategic planning. Very important. You need to know what your organization is going to look like 1 year from now, 5 years from now, and 10 years from now. Decision making. Knowing that there are different options. Being able to see what would happen if you reduced your budget by 10%. What if you got a windfall and increased it by 5%? What would you do? Organizing, trying to identify different human and fiscal resources and try to find ways to reach those goals and make them work. Directing, accepting responsibility to see that plans are implemented and effectively carried out. Controlling to make sure that the goals are there. And that's important in anything that we talk about with financial management. Because remember, we're talking about accountability and transparency. You have to be able to show that you're controlling and you're making sure that people aren't doing something that they shouldn't be doing. And evaluating, determining if the goals are met, if we use the resources appropriately, and even if we should continue on those goals. Hey, we might even think that those goals mean nothing. So, what are the purposes of accounting? Accounting is a favorable thing to look for unfavorable actions. That was a quote in the textbook, and I freaking love it. Accounting looks to see if people are doing something wrong. It's there to report profits or losses, but also to detect wrongdoing. We can blame our old friend Zed Enron for that. Nice little strong definition of accounting. It plans the budget, but it also helps really express what the philosophy of a district and its school is. A budget is a big thing. I should be able to look at a budget with the experience that I have and see if I have access. I need the previous year's budget, this year's budget, and then I need the strategic plan. And I should be able to see what the real focus of the district is. If it's technology, one-to-one laptop use, for instance, for students, I should be able to see that. If it's arts, that should come out in the budget. If it's athletics, that should come out. So really, the budget expresses the educational philosophy of a district, and it's a powerful statement, and I want you to think about that and consider that as you move forward. So accounting is a process. We need to show that schools have increasing progress, and funds are there to help them. Money is tied to performance, and that's scary, and we're seeing that in a lot of different school districts across the United States. One of the challenges that we face a lot up north from where I'm from in the Pennsylvania and Ohio area is money being given to schools based on performance on standardized tests. Money's being given to districts that do exceedingly well and districts that do exceedingly bad. The bad money is there to get them up to standards, and the good money is there for the districts that are doing good to sustain them. Well, the districts in the middle and the rural districts, more rural than anything else, suffer more than anything. And I saw that in rural Ohio. I saw that in rural Pennsylvania as well. And my previous faculty position was in rural Pennsylvania. And we saw that in the budgets and in the capacity that leaders had in their buildings. When money's tied to performance, elective courses suffer the most. More emphasis is on reading, writing, and math. Art gets cut. I'm a former business teacher. Business gets cut. Home ec gets cut. VOTEC is normally outsourced and moved from the school district and into a different building. And your elective opportunities get cut, and that can be a problem. So budgets and handling of money. The budget should help you prepare for future years. As I said before, strategic plans. If you are a district leader, you should know what 1, 3, 5, and 10 years look like in your district. You should be able to project what money is coming in using current fiscal year amounts and say, this is what the district's going to look like by year 3, by year 5, by year 10. Also, accounting, make sure that money is handled properly. This is not sexist, racist, or profiling, and research has proven this. And multiple textbooks have mentioned this too. I use a book by Poston if I'm teaching this for principals. And they say that the person most likely to embezzle money from a school district is a white woman working in central office alone and in their mid-40s. Most cases of embezzlement is a white woman, central office alone, and in their mid-40s. So be aware of that. I'm using that basically to show that it's kind of an isolated situation, and if we aren't watching every employee and we just trust, Betty Sue from accounting, that she knows what she's doing, there could be embezzlement charges that you don't even know that happened. So be aware of that. So what does accounting do? I think accounting does a lot of things besides punish wrongdoers, as our textbook would have you believe. Accounting creates a complete record of financial transactions. It summarizes those activities. It gives you information for budget preparation for the following year. You always base your budget on the previous years. It gives you safeguards on use of money, what you can and can't do. Different funds and different accounts lead to different types of investments. There's also a longitudinal record date. Administrators show, well, hey, we gave 20% less funding to this program last year, so we need to increase the funding to keep it up at capacity the following year. That's why it's important that you keep appropriate records and you go back as a leader and you look at them. So the fund structure. Fund accounting really looks at different types of revenue and expenditures and ways that organizations report them. Funds should only be used what they're designated for. This is why there are budgets for specific categories. One of the things when we look at the Florida Red Book, we're going to look at this. We're going to look at the categories that the state of Florida uses. What are our funds? Well, they say government funds. This is all money not received to other funds. Things like instructional expenditures, salaries, supplies, insurance, utilities, special revenue funds, things like Title I, STEM programs, capital projects funds, things like building construction, purchase or sales, debt services funds. This is long-term debts that exist in a school if you have to pay it off. Those are your government funds, and we'll talk a little bit about those in this class. Proprietary funds are kind of the fun ones. These are the ones that come from local activities. If the school is making money through their athletics, you can give it back to the program. The school newspaper, you give it back to the program. Anything that's an internal service fund, these are things that, like you would have a central printing office. All the teachers ship their printing off to be printed. If you need maintenance, and that's coming internally. Transportation could be internal service if you do your transportation internally and you don't export out. It could be internal service, but that's something else. So your fiduciary funds, these are your local pension systems. Sometimes they are in addition to state retirement systems, or they are a state retirement system. Sometimes districts decide to make investments in something long-term. Agency funds, these are funds that are held in trustee form for a district, so that basically, we could give a scholarship every year to somebody, and we name it after that person. I'm sure all of you have that in your districts. Or this could be used in an emergency if you need an additional staff member due to over-enrollment. So we've talked about the different sources of funding. Local sources usually are money raised by the district. Local property taxes, we've already said this, most common form of local revenue coming in is property taxes. Intermediate sources, this is money that government units, from government units that the local district and the state normally kind of fight over, and that normally happens at the city level and the county level for services. The district basically makes the decision, do I want to use county security guards or do I want to hire my own? And that's kind of that intermediate struggle that some districts will face. State sources, state raises money, gets state aid, and then they decide where they want to distribute it to. Federal sources, this is federal aid or state flow-through money and categorical aid given to the district to serve a specific purpose. So why we are using the Florida Red Book and why we're covering that later in the class. It's specific. We're using that to really look at the expenditure structure. We want to see the commonalities in what the expenditures look like, how they're classified. Most of the time they are by fund, function, and object. The textbook gives you an overarching example of what one would look like. That's great. My opinion is you should look at the Florida Red Book because that's going to give you a better understanding of what it actually looks like in your organization. So, fund. The first thing you do, you say, is it government, proprietary, or is it fiduciary? Function. You say, what's it going for? What's the general activity? Why are we purchasing this, or how are we purchasing this? Object is what that item is. Why did we acquire it, and then what is it going to be, and does it have a lifespan? Are we going to have it for a few years, or is it something that's leased, something that's purchased, long-term debt expense, and you determine that. If you've had accounting, you know that all transactions are a debit or a credit. This gives you self-balancing, meaning when the balance sheet is reconciled and there's an itemized income statement, you can see where the money goes for a school district. The general ledger is where the individual accounts for the organization are listed. For those of you that had accounting, this all makes sense. For those of you that haven't, all you need to know is this key thing right here. That general ledger is going to show us where the individual accounts are listed and what they are for the organization. So you have to audit the schools. In order to keep them accountable, you have to audit. It can be done internally or externally, and then you present reports and test for accountability. Audits are a good thing. Unless an organization is doing something wrong, it's cool to be audited. There's nothing wrong with it because it's going to tell you, is the school accountable? And you want that to happen, especially if you're a leader and your audit comes back great. That looks good for you. Internal audits are a good thing. This is when you as an organization do a self-check so that external stakeholders don't become involved. Because when the external stakeholders become involved, then you start sweating. You want to do internal audits as often as you can because it protects the district and it keeps employees accountable. External audits, most people have more experience with these because when they come in, as our picture shows, people are running and they're jumping as high as they possibly can to get away. CPA firms come in, state organizations come in. The report is normally made available to the public. If you are in a position where you have to do an external audit or be a part of one, as a leader you need to be involved in it, make sure that it is accurate and that it is basically fair and it presents you as a leader in your district in the correct light. State audits are done to show that the state is meeting the needs of the district. These are normally things like transportation claims, if there's a state initiative, how federal money has been spent, things like Title I, a Healthy Schools Initiative. That's what the states really care about. They care about the big overarching things more than anything else. So what should be done? What can you do? All of these pretty much go without much explanation. Good internal accounting, competent employees, extensive documentation that shows school board approval, receipts, reconciled bank statements, purchase orders, and no cash disbursement policies. If you can do all this, your district should be fine, and that will keep your district in check. If you can do all that, you have nothing to worry about. So you'll find this more in finance courses in a school of business. We just do a brief introduction to it. Think about what it means in terms of leadership and how it impacts education. If you take a finance course, you'll do more with it. Next chapter looks at budget planning, which obviously is a critical issue in our schools, and I think that's more pertinent to your role as educational leaders.